Hello everybody. Today we are going to study IAS 36, that is impairment of asset. This video will cover what is the meaning of impairment, the indicators of impairment, measurement of impairment and recognition, and impairment of a cash generating. First, let us understand what do you mean by impairment. An asset is said to be impaired if the carrying amount is greater than the recoverable amount. The objective of this accounting standard is to ensure that the assets are always recorded or recognized at the recoverable amount. For some reason, if the carrying amount is more than the recoverable amount, it would not give a correct picture to the users of the financial statements, and therefore it becomes necessary to write down the asset to the recoverable amount. Therefore, an asset is said to be impaired if the carrying amount is greater than the recoverable amount. This does not include or does not apply to inventories, construction contracts, deferred tax assets, and assets arising from employee benefits. Financial assets are also included in the scope of Accounting Standard 32 and not here. Non-current assets classified as held for sale are also not covered under this accounting standard. Now, when we talk about the recoverable amount, how do we calculate or recognize the recoverable amount? The recoverable amount is greater of fair value less cost to sale or value in use. I repeat, the recoverable amount is higher of either fair value less cost to sale or value in use. Now, what is value in use? Value in use is nothing but the present value of the future cash flows that are going to be generated or related to the concerned asset, discounted at cost of capital. And fair value is nothing but the market price. Okay. Now let me explain with an example. Take for example, a machine had a carrying amount of $90,000 as on 31st December 2010. Its market value is $75,000 and the cost of disposal is estimated to be $2,000. A similar new machine would cost $1,25,000. The entity expects to generate a net cash flow of $29,000 per annum for the next 3 years. Cost of capital is 7% and you are required to calculate the impairment loss, if any. Now first let us identify each amount. Carrying amount given in the example as 90,000. What is fair value less cost to sell? The market value is 75,000 and the cost of disposal is estimated to be 2,000. Therefore, fair value less cost to sell becomes 75,000 minus 2,000, that is 73,000. Value in use is calculated as the net cash flows that are going to be generated is 29,000 per annum for 3 years. So you can use the annuity factor from the table, or you can do the calculations of present value and multiply it with the factor. So you will get the value in use using 7% as a discounting factor, which is coming to $76,105. Now, as I said earlier, recoverable amount is higher of the fair value less cost to sell and value in use. Now, between fair value and value in use, the higher amount is 76,105. Therefore, the impairment is calculated as carrying amount of 90,000 minus 76,105. So, the impairment will be $13,895. Okay. Now, let's go to the next information. Indicators of impairment. Now, there are external factors which indicate that an asset might be impaired. What are these? There could be a decrease in the market value of the asset. There could be technological changes. For example, whenever a new uh, iPhone is introduced, the value of the previous version gets deteriorated. Okay, so that could be impairment, right? Now, interest rate increase, this is also an indicator of impairment. Now, let me explain this. Interest rate increase. This increases the discount rate and affects the value in use. You are all aware that as the interest rate increases, the present value decreases. Therefore, if there is a continuous increase in the interest rate, the value in use will deteriorate, right, or decrease. So compared to carrying amount, there would definitely be a impairment of the asset. These are some of the external factors. There are also internal factors. The asset could be damaged, or there is an evidence that an economic performance of the asset is adverse. Okay. So whenever there are any indicators of impairment, it is required by the entity that they would carry on the revaluation, and if there is any impairment, the impairment has to be recognized. Okay. Now, how do you account for this impairment loss? The impairment loss should be recognized in statement of profit or loss. If there is a previously recognized gain, revaluation gain, then this impairment loss would be adjusted against this revaluation gain. So, the impairment loss should be recognized in SOPL if it is for the revaluing the asset for the first time or testing it for impairment for the first time. But if the asset was revalued earlier and you already had a revaluation gain or revaluation surplus related to the asset, instead of recognizing it in SOPL, you will adjust the impairment loss from the revaluation reserve or revaluation surplus. So the entries could be debit, statement of profit or loss, and credit asset because you are reducing the value of the asset. Or if there was a related revaluation surplus, you will debit revaluation surplus and you will credit the asset. I repeat, if there was no previous revaluation gain related to the asset, you will recognize the impairment loss in SOP. Now let's go to another concept which is known as cash generating unit. A cash generating unit is the smallest identifiable group of assets which generates cash flows independently. That means these activity may not be related to any other activity of the entity and it is able to generate cash flows. Therefore, impairment can happen in this cash generating unit as well. Now, how do you calculate this impairment? The carrying amount of the CGU is equal to sum total of all the carrying amount of the assets of the CGU. Okay, so we have one figure which is the carrying amount of a CGU. Similarly, the recoverable amount of a CGU is equal to sum total of the recoverable amount of all the assets in a CGU. The concept is the same. If the carrying amount of the CGU is more than the recoverable amount, that means the CGU has been impaired. Now the question arises, how will you allocate the impairment loss to the various assets in a CGU? Okay, because as I said earlier, CGU is the smallest identifiable group of assets. That means there are multiple assets in a CGU. So if there is an impairment of the group of assets as a whole, you need to allocate the impairment loss to those assets on pro rata basis. Okay, but there is a sequence to it before you apply the pro rata basis. If any particular asset has been damaged and you are able to identify it, you will first write down the value of that asset to the extent that it is damaged. The next part is you will calculate the impairment loss and allocate the impairment loss to purchased goodwill. Each CGU may have purchased goodwill, and the first step in allocating the impairment loss is you will write off the goodwill first. After writing off the goodwill, if you still have an impairment loss, the balance impairment loss will be allocated to all other assets, including any other intangible assets like patents, royalties, etc., on a pro rata basis. I hope that is clear. And generally, each CGU also has current assets. Now, current assets are always carried at their recoverable amount. Therefore, as I have highlighted here, no individual asset will be written down below its recoverable amount. So when you are allocating the impairment loss, current assets may not be assigned or allocated with any impairment loss. Let me explain this to you again with an example. A cash generating unit had the following assets. The building was valued at 8,000, plant and equipment is 2,500, goodwill is $150, and current assets is 350, and the total assets of the CGU is 11,000. One of the machines which had a carrying amount of 500 was damaged and scrapped. The recoverable amount of the CGU is estimated to be 9,500. How would you allocate the impairment loss? Now, as you can see here, the total carrying amount of all the assets put together is coming to 11,000. In the example, it is straight away given that the recoverable amount of the CGU as a whole is 9,500. Correct? But the additional information is that a machine has been damaged and the carrying amount of that machine was 500 and it has been scrapped. So let me take you through this example step by step. Okay. Now the first step would be to write down the machine. Plant and equipment will be reduced by $500 since the machine with carrying amount of 500 is damaged and scrapped. So the plant and equipment which was earlier had a carrying amount of 2,500 will now be written down to 2,000 because 500 has become scrap. Now the new carrying amount of the CGU would be 11,000 minus 500. So 10,500. Recoverable amount is given to you as 9,500. Therefore, the impairment loss, as we say, is calculated as carrying amount minus recoverable amount. So, in this case, the impairment loss is 1,000. That is 10,500 minus 9,500. 1,000 is the impairment loss. So, the next step would be to write off this loss. We will first write off the goodwill. So, goodwill will be written off, which is $150. Allocate the impairment loss to goodwill first till the goodwill becomes 0. Now the balance impairment out of 1,000, 150 has been written off. So now you have a loss of 850 which you have to allocate between the assets. As I said, current assets are carried at recoverable amount. So no impairment loss would be allocated to the current assets. So the only two assets against which you have to allocate this loss of 850 is building and plant and equipment. So the balance impairment loss would be allocated to building and plant and equipment on pro rata basis. Now after writing off 500 from plant and machinery, the carrying amount becomes 2,000. As you had noted earlier, the building had a carrying amount of 8,000. So the ratio in which you will distribute 850 would be 8,000 building and 2,000 plant. Okay. So 850 in the proportion of 8:2, 680 will be the impairment loss allocated to the building. And the value of the building will now become 8,000 minus 680, which would be 7,320. And the plant would be, the impairment loss allocated to the plant is 850 into 2 by 10, so 170. So the impairment loss allocated to plant and equipment would be 170. Now I want you to write down the new values of the assets, right? Now goodwill will become 0, building will become 8,000 minus 680. So that would give you a figure of 7,320. You had a plant of 2,000. From that you will subtract the impairment loss of 170. So that will make it 1830. And you had current assets which were valued at 350, so now you have all the assets put together. The carrying amount of the CGU will be 9,500, which will be the same as the recoverable amount. I hope this video has been useful and it helps you to solve your questions. Thank you so much.